the world is a very different place, and everyone will say nobody saw it coming. But it's clearly been brewing now for many years, and it's like every single day you can just see this catastrophe inching toward the abyss. We're at the zero line.
Keiser believes we are teetering on the edge of an impending economic collapse that has been gradually brewing for several years. He warns that we may be only a few short months away from witnessing a disaster unfold in financial markets. The deteriorating condition of various nations' fiat currencies is a clear sign that we are entering precarious territory. Furthermore, the escalating inflation rates bear witness to the growing instability within these systems, eroding people's quality of life. Keiser draws attention to the far-reaching consequences of this crisis, affecting individuals' ability to secure essential necessities like housing, food, and energy. Looking ahead, Keiser anticipates a shift towards Bitcoin gaining momentum, driven by a series of bank collapses. He contends that a significant number of banks are currently insolvent, being propped up by questionable accounting practices that will soon be exposed. As we prepare for an increase in banking failures in the coming months, Keiser promises to reveal his market predictions for the end of 2023 and explore Bitcoin's pivotal role in shaping cryptocurrency markets and the global financial landscape.
It's a global fiat money game, and you see different countries, their fiat money regimes are collapsing in real time, right? Argentina, these countries like this, or Lebanon recently had a complete collapse or central bank collapse. And inflation is definitely an indication that your fiat money regime is in dire straits, and inflation is breaking out in a big way. It's not going to return to where it was before this latest inflation breakout. The inflation and the collapse of fiat money is here now. People are feeling it right now, and the quality of life all over the world is being impacted by it, and it's being impacted in the U.S. People can't buy a home, people can't afford food, price of oil and energy is now starting to ramp back up again. So it's playing out right now, and there's nothing that can be done to stop this inflation. The economy is completely out of control, right? So even the interest on the debt in the U.S. is now over $1 trillion. So I think it's the biggest line item on the budget, bigger than the military. So there's, that's what we were told for decades was, trickle-down economics or what have you. They're going to grow the economy, and the increased tax revenues, we're going to pay down our debt. That was the theory for years, that they're going to stimulate aggregate demand, and it's going to cause GDP growth, which will increase tax revenues, and we're going to pay down our debt. Well, that never, ever, ever happened, and predictably never happened. It was just about printing more money and a lot of malinvestment, that is to say, thieving going on, and the capital disappearing. Trillions of dollars just going into a global black hole controlled by the big four accounting firms, this floating casino that never pays taxes, which is now over $30 trillion in big, right? So there is no coming back. There's always only two possible pathways. Either you enter into a fatal type of hyperinflation, or you're just going to default across the board and you go into a deflationary depression. So it's a depression in either way. It's either an inflationary depression like you see in like a Zimbabwe, or it's a deflationary depression like you had in the 1930s. But either way, quality of life is deteriorating, and it's doing so in the U.S. in a big way. And so there's nobody's coming forward with any solutions, because it's past having a solution. Meanwhile, there are now 3 or 4 candidates for president and other political offices that are talking about Bitcoin, right? So RFK Jr. talks about Bitcoin. Ron DeSantis talks about Bitcoin. Cynthia Lummis has also been talking about Bitcoin. So the political class is beginning to see Bitcoin as part of the solution going forward. And as you start to get into more of a Bitcoin frame of mind, this will be a transition from the fiat money world to a Bitcoin standard. And it'll be driven, I don't see it taking decades, because it'll be the result of another colossal wave of bank failures, which is baked into the cake, really. The banks are insolvent. They're held together with accounting chicanery. There's nothing there. The central banks are completely devoid of any assets whatsoever. They're leveraged worse than Enron. I think the Federal Reserve is leveraged 90-1 or something like that. It's completely the Bank of Japan, which is really the linchpin central bank in the world. If you want to know really, and you want to follow global central bank kind of scene, you would follow the Bank of Japan, because they've always been the funding currency for many decades now, where other central banks would borrow from the Bank of Japan and invest in higher yielding currencies in what's called the carry trade. to try to extract another 20 or 30 basis points. The Bank of Japan has always been the cheapest source of funds, and because they've been tapping into their country's pension funds, which were overfunded by billions of dollars for many years, and they've kind of run out of that. They've run out of that money, and they're going bankrupt. And now Japan, it looks like it's entering into default, and that will drag everybody else down with it. And so people, if you turn on CNBC or you turn on financial news or you read the Financial Times or the Wall Street Journal, it should be front page news that what's happening in Japan, but it's not. So it'll be a big shock. It'll be one day it'll be like, oh, Japan just went bankrupt. The world is a very different place, and everyone will say nobody saw it coming. But it's clearly been brewing now for many years, and it's like every single day you can just see this catastrophe inching toward the abyss. We're at the zero line. Well, it was inevitable, of course, that Wall Street would get into Bitcoin. My background is mostly in Wall Street. So my introduction to Bitcoin, the way I saw Bitcoin from the beginning, was from that perspective. So I wasn't coming to it necessarily from the technological front, and I wasn't coming to it necessarily from the philosophical angle. Mostly I saw it, and my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous, because there's $100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now. So when a BlackRock or some of these other big funds, Paul Tudor Jones was, I think, probably the first hedge fund to mention Bitcoin in a big way. And so when it becomes recognized as an asset class, and if you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says, once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that $100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very seven-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this Crash JP Morgan Buy Silver campaign, and we got the price from 15 up to 50, which was the old, the Hunt brothers. The Hunt brothers got Right, so
the 80s.
in the 80s, the into the $50 range, they were cornering silver. So we got it back up to the old Hunt Brothers $50 level. And then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry a much greater short position in silver. So they printed up a lot of paper silver derivative, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market, but at the end of the day, because the ability to pull private keys is not like it is with Bitcoin. I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels. That was just to give a shout out to Trace. I mean, before Michael Saylor, everything Michael Saylor says about Bitcoin in terms of an asset class, Trace Mayer said first. Starting he was a buyer of Bitcoin at 25 cents, and going back to 2010. But he's another example of somebody who disappeared, one of the OGs who disappeared, and that's kind of an interesting story as well. So yeah, you're right that when you have huge money in these markets, they have the ability to manipulate price.
Max Keiser discusses the impending transformative waves on the horizon for the global economy and financial markets. His vision of a potential shift toward a Bitcoin standard offers a glimpse into a world preparing for significant change. In this evolving landscape, adoption and knowledge could prove crucial for navigating the challenges of the months ahead. Remember, staying well informed in this volatile environment is your greatest ally. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.